Welcome, my name is Vishal Texanani. Today I'm speaking to the Executive Director of Afterpay, David Hancock, and we're going to focus on the recent Senate inquiry's recommendations into the buy now, pay later sector, Afterpay's accelerated growth plans into the US, some of the risks in the sector, as well as some of the innovations that Afterpay is bringing to the market. David, it's so great to talk to you. How are you?
Very well, great to see you again.
No worries. So David, let's first turn to the Senate inquiry's recommendations into the sector. So the inquiry did stop short of recommending that providers like yourselves conduct costly credit checks, but it did recommend that the sector adopt a suitable regulatory framework, that the industry develop a code of practice, and that ASIC's powers be expanded to cover buy now, pay later products. Can you talk about the implications of this for Afterpay?
Absolutely. So, Vishal, as you pointed out, the inquiry just came out with the recommendations. We participated with that. Nick and Anthony, the two co-founders, went up to Brisbane. We were very, very pleased that actually we had a very fair hearing. And this really followed off the back of the ASIC review. And what it really established was that yes, there's a whole lot of different participants in buy now, pay later space, but Afterpay is fundamentally different from all of these other providers, which are typically credit providers. So they came up with a couple of recommendations, which we were very supportive of. So product intervention powers by ASIC, and we think that's a very important development in the industry. The second one is to look at making sure that we treat our customers appropriately. And the thing that we were most pleased about that was, especially in some of the parallel reports that came out from the Greens as well as the Liberal Party, because this was a Labor-led inquiry, is that it really showed that Afterpay is making a fundamental difference in changing the way that people buy and they're using it responsibly. So all up, the Senate was a really good confirmation about our business model, but most importantly, as I said, it followed on from the ASIC review, which saw that we were fundamentally different and we're not a credit provider. And so having the appropriate legislation and regulatory oversight very much focus upon why we're different.
Okay, so from an investor perspective, there's no material impact to your business model?
No. So we said quite clearly at our results, no material impact. And then we're working with the industry. We've been very much at the forefront around a code of practice. And for us, we're in the middle of working with a number of different industry participants to push that forward.
Okay, excellent. Let's turn to your results, which were released last month. So I think investors can clearly see that your business is getting scale. However, the thing I took out the most from your report was that you pointed out you're accelerating your strategy to grow in the US. Now, I know you were already being aggressive in the US, but it seems to be even more so now. Can you provide some more color around why the US and what is it that you're going to do more of?
Yeah, so in the US, it was interesting at December, we had 600,000 customers. We're now at approximately 1 million customers as we stand here today. So we've added 400,000 customers additionally in a very short period of time. So what that's showing us is we've been able to bring in some amazing merchants. So people like Urban Outfitters, Anthropology, DWS, Kylie Cosmetics, the Kardashians, and that's really fueling this growth. So what we've decided to do is actually to take some additional investment and really accelerate our growth.
Okay. Do you anticipate raising any additional capital from investors to fund your ambitious growth plans?
At this stage, we're very well capitalised. So we did an equity raising not so long ago, around about just under $150 million, but also that we've got a couple of very large facilities in place. We have $500 million worth of bank facilities in Australia, and we have around about $300 million which we're negotiating on in the US markets. So we have ample room to really grow our receivables book, and so it's not envisaged that in the near term that we need to raise additional capital.
Okay, let's turn to disruption. So in Australia and internationally, you are seeing I guess some other competitors emerging with some new solutions, or existing providers rebadging their solutions or becoming more aggressive with targeting merchants. So if I can flick a few names, people like PayPal Credit, Split It, OxyPay, Klarna. I guess, what's the threat of disruption here, or are you sitting in different parts of the markets targeting specific consumers?
Yeah. Listen, it's definitely a question that I get asked a lot, that we get asked a lot at Afterpay. I mean, the thing is that we really created something that was fundamentally different. Remember, the merchant pays for our service, so the customer gets a free service. Yeah. Every other model that you just spoke about, they generate all of their income predominantly from the customer, which is through interest, hidden fees, other charges that are out there. So we're very pleased that we actually sit completely differently, and our value proposition is fundamentally different from any of these other competitors, whether it be, as you say, PayPal Credit or Klarna. All you need to look at in the balance sheet where they generate their revenue, and it's all from charging the customer. That's not what Afterpay is about.
So David, let's talk about some innovations that your business is doing. Yeah. You mentioned Play, and we've noticed that now you can use Afterpay for services like dental and optometry. Can you talk about some of the innovations?
Yeah, so we're very much a customer-focused business, customer-facing, and many of our customers have reached out to us and said, listen, they want a budgeting tool, they want the ability to use Afterpay in a whole number of different areas. So optometry, we've been able to bring on OPSM, some really amazing other brands, Bailey's, and then in the medical area, what we've been able to do, we've been able to roll out with Primary Dental, High Smiles, a whole number of different groups that are out there, because this is really responding to what our customers want, to be able to budget and pay over a short period of time without getting charged any interest or fees. So that's been really important. So we've just launched something called Play, which is a really unique way to actually go and book travel. So we've got these really amazing packages that we've curated. So you can go to Ibiza, or you might want to do a wellness package going up to Bali. But most importantly is that you won't get yourself into debt. So basically you'll pay it over a longer period of time, but by the time that you actually travel, that you won't actually have anything to pay off. So we think embedding the savings process and getting the benefits of booking up front and doing that all differently will really change the way that people will actually travel.
Okay, so that seems very innovative, and I can see that many consumers might want to use products like that, or that type of system. Let's just lastly just talk about some risks. So some of the risks we've talked about previously, disruption, but also the consumer market and where we're at with that. Are you seeing any risks on the horizon?
In the general market?
Yep.
So clearly, if you have a look at the US, obviously the job numbers came out a little bit disappointing over in the US. We've seen, obviously, in regard to downturn in housing. So I think housing will probably have a bit of a knock-on into consumer sentiment. But I think for us at Afterpay, we're actually probably a net beneficiary of some of these changes that are happening in the underlying. So we're not seeing any slowdown in our underlying growth. But clearly, there's a couple of headwinds that are out there at the moment, and we need to watch those carefully.
Okay, so really important for investors to watch the consumer behavior patterns.
Yeah, absolutely.
Okay, great. David, thank you so much for your time again. Really appreciate it.
Great to see you.
No worries. I hope you found this video informative. Now, please remember, what we talked about today isn't investment advice. If you're thinking about transacting in shares of Afterpay or any of the other entities we mentioned in the interview today, it's really important that you do your research, and please consider seeking financial advice. My name is Vishal Tekshilani, and I'll see you next time.